Good morning. Today is Tuesday, July the 11th. The time right now in Singapore is 11:40 in the morning. We have 20 minutes more to go before the noon. And overnight, we have see a little bit of movements in U.S. equity market. The market actually first dipped before it closes marginally higher. Basically, the market doesn't want to do big moves just before the major CPI numbers coming up tomorrow. Now, the market do have expectation in the sense that the market do expect the headline CPI numbers to actually dip from 4% to 3.1%. So that's a big move as far as the expectation is concerned. This is actually going to be very interesting because if the number come out misses this estimates, there's going to be quite a bit of volatility that we can see tomorrow night. In the meantime, market do expect the Federal Reserve to respond if the headline CPI number starts to dip within expectation. So do watch out for the big number coming up for tonight. For tomorrow night. And in the meantime, the market will just be basically hanging on, just waiting for the outcome tomorrow. So overnight, we can see that the Dow Jones actually dip a little bit, but closes slightly on the marginal on the positive side, and closes at 33,947.8. So not much of a move there, but I do expect prices to actually dip a little bit more, maybe tonight, going into 33,260 to 33,500 levels. So these will be the perfect level to actually see the market consolidate, perhaps even attempting to rally one more time. So we will have to see the result tomorrow to see what market does. Okay, and in the S&P 500, we also saw the same thing. Not much of a movements here, but I do like to see prices coming back down to test the 4,328 levels. And if that is the case, then the market could possibly settle around here before it attempt one more rally. And this rally could be the one last hooray rally that the market may be actually seeing. Now, if the market do break below 4,328, there's another catchment area which I mentioned in previous updates, that 4,210 to 4,300 levels could actually also offer a catchment area. Now, in the Nasdaq 100, again, we see very little, if not almost nothing in terms of volatility, as we see in this chart here. The failure to take out the previous high at 15,284.65 is basically weighing on the markets itself, and there's a good chance that the market may actually dip a little bit lower to 14,500 levels to 14,700. So basically this area highlighted in green could be an area where the market may dip into. The odds of another challenge beyond 15,284.65 is actually quite high, because you can see that the market has not really pulled back in any meaningful way. So I think the basic momentum is still very much in play for the Nasdaq 100. Now, over in Asia, we can see that the Nikkei has stabilized. It has actually done a three-way pullback very neatly into the bracket of prices which I have been highlighting, which is the 32,000 to 32,300 levels, with a low of 32,065 traded yesterday. And the market right now is probably looking to see if it can hold out, and maybe if the Wall Street actually rebounded, maybe it will take Nikkei along for the ride. And over in Hong Kong, things seems to have settled down a little bit after yesterday's the CPI numbers and the PPI numbers coming up from China, which shows that Chinese economy is on the way to a deflation, and that is definitely a different set of problem, very different from the rest of the world. And as far as Hong Kong is concerned, the Hang Seng market has actually taken that as a reason to cover back most of their short position. Now, the low traded last week was 18,279.7, and currently we are at 18,776. So possibly the market may actually go a bit higher, but top side is going to be very difficult to imagine prices going beyond 19,500. So this could be the first barrier to higher prices. Let's see whether how the Hang Seng will react as the market develops. Over in the Shanghai Composite Index, we are seeing a little bit of a bounce better than yesterday. And again, this is an area in which the market bounced off 3,190 levels, which is well within the catchment area of 3,183 to 3,195, which I've highlighted previously. And this could actually end up seeing the market challenging the 3,276.5 that we saw back in in the middle of June 16 itself. So not much of a room for play here, because this is basically a very mature old bear market. So basically the market is rebounding within a seriously bear market here. Now, over in energy prices, we see energy prices continue to edge higher to a new high for the month at $74.14 before pulling back. Now, this pullback here happening at $74.14 is an outside bar on a 4 hours time frame. Now, this is a bearish development. So any price higher, I do not believe it will take out $74.14. At any rate, this barrier of prices is going to be at $72.91 to $74.31. So from this area, there is a very good chance that it may slide back. And if the market do slides back to somewhere around $70, that will be a great level to pick up some more long position. Basically, I'm already out and I'm just waiting for a level to buy back again. And in the gold market, gold is struggling right now. It is developing into a potential three-wave rebound. And if the market can go back to a $1,945 to $55, I think that would be a great level to see if there's going to be any reaction. And odds is that it may come back down again to test the 1,900 levels all over again. Okay, so do watch out for that development. And also the same thing happening in the silver market. We do see a bit of a rally, and a high as of this morning, there was a rally beyond the most recent high at $23.31, and you see that the market has a marginal high so far, and this could actually put it in the position to actually challenge the $23.70 to perhaps even $24 per ounce. So this is about the top side I see for this current rally here that we see in silver. Over in currencies, we can see that the dollar index has continued to plummet. Now we are already below the most previous the previous low at 101.49 here, which was last traded on June 22nd. So this is actually laying the ground for a more extended decline in the dollar itself. If the market can rebound, I think the top side will be about 101.90 levels. So look out for this immediate barrier to higher prices, and possibly the target could be around 100 to perhaps even 99.4. So this is the dollar index here. So if you look at the other major currency pairs such as the euro dollar, which is a mirror image of the dollar index, we can see the same thing happening. The euro dollar has a marginal high beyond the June 22nd high of 110.12. Now this morning we have a 110.20 high here. So this market right now is in or brushing against this bracket of prices, which I think is going to put it vulnerable to selling pressure. This level is 110.50 to 110.90 levels. So do look out for market to exhaust itself somewhere between this bracket of prices. We are already very close, and I think it's just about 20 pips away into this bracket of prices, which will put it vulnerable to profit taking and perhaps even the re-emergence of selling interest here. Okay, so be careful about chasing the euro dollar much higher. And in the sterling itself, sterling seems to be again very similar to what we are seeing in the euro dollar market. Now is brushing against the barrier of prices, which will put it vulnerable to selling interest. The current high this morning is at 128.80, and I'm looking at 128.90 to 130.71, and this bracket of prices may actually be a major barrier to higher prices. Over in the Aussie, the market is a little bit unsure. I do not know where it's going, but topside it seems that market will be contained around 0.6710 to 0.6735. So not much activity here, but if you dare to sell this, I would think that there is still a good odds that you can possibly sell this thing for a move back to 0.65 levels. 0.65 is the target for now. Okay, so do look out for the eventual move of these Aussie dollars to the downside. Dollar Canadian is basically having done a three-wave rebound to 133.87, and now the price seems to be coming down. If the market breaks the 132.40 levels, it is likely to go down even lower to even test the 130 levels. Okay, so do look out for the possibility of an extended decline in the dollar versus the Canadian dollars below the 131.17 that we last saw on June 27. Dollar yen has accelerate its decline. So this decline here looks like a very much like a third wave here. So it does shows a possible reversal in the dollar versus the yen. And this morning we have a low at let me see what's the low here. The low is 140.61. So if we do get a bit of a rebound topside, I think it's about 140.170 to 142.30. So if your market can go back up into this bracket for now, I think that will be all you can do before the market go down to test a 138.70, which I mentioned previously could be the target. Now, in digital assets, we look at Bitcoin. Now, Bitcoin has not done very much, but there was a rally attempt this morning. The best it can do was 31,000 or $37, and the market also end up as a outside bar. So it means the market may actually lose its grip and trade lower, perhaps even lower marginally below to $29 to $29,508 that we saw back on end of June. Okay, so all I expect is just a marginal low below this 29,500, and that will put it somewhere between 29,000 to $29,550, perhaps even marginally lower to $28,800. So by and large, give it a little bit of room to maneuver, but I think by and large we could be seeing expanding a triangle or diagonal here. So this means that we're going to see marginally higher highs and marginally lower lows before it bounces back up into the bracket itself. So this will take some time, because as it gyrates between ever expanding marginal high and low, it's created the illusion. So do not trade on breakout, because it's very dangerous for trading breakouts, because if every time you put a position into a marginal high or low, you tends to be stopped out. So be careful, allow this market to resolve itself over time, and I think it will take possibly into next week. Okay, we are already into the almost the middle of the week itself. We are today on Tuesday, so okay, that doesn't give us a lot of room. Perhaps tomorrow when the CPI number is released, we will see what the market do, but in the meantime, just give it a little bit of time to work itself out. So this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow for another update. Bye bye, take care.